Hi, this is Mike Maloney with Jeff Clark once again, and we've got a lot to cover here. Jeff, how are you doing?
I'm doing great, Mike. It's great to be back with you again, of course. Yes, we have a variety of interesting topics to cover today. So let's jump into the first one here. And this is an article on some quotes that Ray Dalio has made. He has long said that cash is trash. And now he's saying it's time to buy stuff because of stupid bond economics. And what he's basically trying to point out here is that cash is trash and bonds are stupid, in his words, because of currency creation, A, and B, because of rising inflation. That makes those two asset classes less valuable going forward. So, Mike,
Yeah.
I think he makes a great point. What do you think?
Well, I absolutely agree with him. And Ray Dalio is one of the most successful investors that there is. And he is also an investor that really understands economics, like macroeconomics. He understands how the economy works. And so that's very important that this guy is now saying he the quote is the economics of investing in bonds and then parentheses and most financial assets has become stupid. He just thinks it's stupid. And so do I. We live in this insane world where everything has become out of control. And it's because we've got some really stupid people running things. They think they're the most brilliant people on the planet. And they're not, it's not really stupid. They're arrogant. They believe that they are right at all costs. And no matter how much they're proven to be wrong, they will just say, well, we didn't do enough of it. It can't possibly be our theories. It can't possibly be that these equations could be wrong. What it is we are right. We just didn't do enough of it last time, so we're going to double down on it this time.
Right.
But he says, rather than get paid less than inflation, why not instead buy stuff, any stuff that will equal inflation or better? So that's basically, that's what I've been doing. I believe this is absolutely right. But we're at this crossroads right now where we don't actually know what's going to happen. Who was it that you were saying was, I believe that we could be going into this 1920s style boom for like a couple of years here. Who was it that you were saying was just writing about that?
Yeah, I mentioned that before we came on air here. That was Frank Holmes at U.S. Global Investors, who I have a lot of
Yeah.
respect for. But
Yes.
his research, he's suggesting that we could be on the cusp of another roaring 20s, just like back in the 1920s. And we all know
Yeah.
what that eventually led to. But
Right.
he's thinking the
And
demand is going to really jump here and push inflation a lot higher.
it's not going to last 8 years though, like it did during the Roaring Twenties. It's going to, if that happens, it'll probably last like a year or two, and it's because of all of the pent up demand from COVID and the lockdowns suppressing everything, the GDP, the economy, and people's own demand, their gratification, plus all of the stimulus injected during that period of time. Now, that's very similar to episode 7 of Hidden Secrets of Money, where I talk about velocity. And, when people's anxiety is high, velocity slows and they save currency. You lift that anxiety and suddenly all that currency comes flooding out. You have an economic boom. It starts off as something that looks good to everybody. And all of the Keynesian central bankers and economists are going to be trotting out how right they were and that this worked. But then, when there's so many examples throughout history where you go through this good period, but that good period is just the on-ramp to hyperinflation and an economy that's entirely destroyed. So he also thinks that this is exhibiting classic bubble dynamics. And if we go into this roaring 20s, all it is doing is inflating the bubble higher and making the eventual implosion so much greater. But that will do things like cause gold, silver, and cryptos to explode much higher than they would if we just go into a crash right now. Either way, I think it's going, whatever the crash is, it's going to be devastating when the implosion comes. But the more we inflate this, the worse it gets. Are there any other things that you took from this article?
Well, a lot there. The message from me, even though Ray Dalio doesn't say it, is I just feel so much more comfortable owning gold and silver right now, Mike.
Yeah.
Like you said many times, going into this kind of an environment, no matter which way we go, if we go into deflation first or if we go into this inflation first,
Yeah.
I just sleep a whole lot better having a very significant exposure to gold and silver.
Yeah. He also says he believes cash will continue to be trash. Borrow cash rather than hold it as an asset and buy higher returning investments. He says if history and logic are to be a guide, policymakers who are short of currency, he says money here, will raise taxes and won't like the capital movements out of debt assets and into other stores of wealth and other tax domains. So they could very well impose prohibitions against capital movements to other assets, including gold and Bitcoin. Now, what that means is that you want to have these assets before they do that, because they're going to be trying to encourage you to sell them. And so they're going to make it harder to buy these assets if that happens. However, the last time that the U.S. When we made gold illegal for American citizens to own in 1934 through the end of 1974, in 1934, gold was our base currency, and what they wanted to do was inflate. And so they were making gold illegal and recalling the gold that was in circulation, those gold coins, so that they could inflate. Today, there's no connection between the US dollar and gold. There could be at any moment because the central banks do hold it as an asset. But then this goes on to say that the United States could become perceived as a place that is inhospitable to capitalism and capitalists. And it's happening right now. And it is so sad to see the country that became the leader of freedom and the leader of capitalism. And it took us to the highest standards of living in the world. To see that fade into history is just such a sad thing. And I've been, for 15 years now, I've been actually more than that. I've been rearranging my life, trying to get ready for this and protect myself from this. And, I'm in the lowest tax jurisdiction that I can find. I'm right now diversifying into some productive property. And so, yeah, I absolutely agree I think this is a good article for people to read.
Well, speaking of bubbles, Mike, here's another article from a hedge fund person, John Hussman, another very successful hedge fund manager. And I love this chart, but he says in his tweet here, this is the ratio of the price of the S&P 500 relative to its revenue. And he says here, in the financial markets, past returns are most glorious, the moment future returns are most dismal. And enthusiasm about investment prospects is the strongest the moment those prospects become the weakest. But this chart, Mike, paints a very clear picture. It almost looks like a Bitcoin chart here this past year or so, doesn't it? Price of the S&P going straight up relative to the revenue it generates.
Absolutely. But it's a shame that this chart doesn't go back further in time, because what you would see is that this ratio of 1, where the revenues of the company annually equal the price per share. The revenues per share equals the price per share. That's a ratio of 1. And it looks like being in balance, being fairly valued, happens at about a ratio of 0.75. And if you could take this back into the 1950s, you would see that. And we've been in this extreme bubble for this entire century. You can see the bubble in the year 2000, it got to about 2.25. So 2.25 times the amount of their revenues. So the price per share of stock was 2.25 times the amount of revenues per share. And you can see the real estate bubble, where the stock market was once again in a bubble, but not such an extreme bubble. And then where we are today, and we're basically at 3 times. This has never happened before in world history, completely unprecedented. And what you see is this big dip and contraction last March, but then the bounce out of it has been huge. And because it's a ratio chart, this can be driven with 2 different dynamics. You could either have dramatically rising prices, which we have had, or you could have dramatically falling revenues. And either way, this chart goes up. Revenues fall, the price divided by the revenues, or whatever it is, goes up, because the price is too high compared to what the income of the company is. And so what's happening here is both. I mean, now companies are starting to make some revenues again, but for a while, that was going down. And so when it went down in March, that was the price contracting, not the revenues yet. And then it went up as the revenues contracted and the prices rose. And it's a pretty violent reaction. And what I see here is that there's nothing like that preceding it in history. And so we're getting to this point. You know, I've often described the economy like a spinning top. And a spinning top is very stable for a while. And then as it the rotation slows, you'll see it do a little like wobble, and it'll be stable again. And then it'll wobble another time, and then it starts to do this precession. And we're getting in to these really sharp wobbles, like there's something, it's building up energy for something really big to happen.
It really is, Mike. Look, it's even bigger than it was back during the NASDAQ bubble there in the year 2000. So this is really toppy and a little scary, frankly. So I think you're right. And in fact, I'm writing an article right now on how to prepare for a stock market crash, how gold and silver investors can prepare for it, because I think at some point, maybe not right this imminent, but at some point it's going to happen, and we need to be prepared for it. So that'll be out probably this week. So very good.
I see that chart as not just scary, but downright frightening. It's
Yes.
Something where you know that what's happening just by the angle of that rise, and looking at all of the history before that, this cannot be sustained. It's impossible. And when you get something this pushed this far out of balance, the correction is going to be devastating.
Yes, that's the point. It's unsustainable. And here's a good tweet of the day, Mike, that kind of ties in with this. Is from Kim Kiyosaki, Robert Kiyosaki's wife. She says, it can be scary to make change happen, but think about it. If you don't take action now, what does your financial future really look like? That seems like some really good advice in light of what we're talking about, doesn't it, Mike?
Yes, it does. You know, and it's been a while since I've seen Kim, but you know, I used to see her and Robert quite often, many times a year, and we traveled. You know, I'd go to conferences where they were speaking and speak with them, and so on. And Kim is just a wonderful lady. She is so nice and so down to earth. But yes, she's basically saying that, you know, you have to, even though it's scary, you got to sort of stuff that and push forward and make a change. And to me, right now, it's the time to do it. You know, there's people that have watched our videos quite a bit. They know that I've talked about hash graph, in the past, and that I was invested in it, or I am invested in it. And I did a video, I don't know, a couple of months ago, and it was at 7 cents, and it went up to 9 cents. And I got a email from somebody that was considered himself a crypto expert, and he was saying, "Shame on you! You're pumping and dumping something." And I wasn't. I was basically coming up. We had news. We had something big to talk about. And the thing is that Hashgraph spent an entire, all of January of 2020, it was at a penny. Now there's a whole bunch of people wanting to buy it now that it's at 35, 40, 44 cents it hit recently, from a penny to 44. They didn't buy it back then. The making the step can be scary, but you've got to invest. Our producer, Dan Rubach, was saying that, and it was true, that Hashgraph was probably the most asymmetrical bet that he had ever seen. And I believe that it's still probably a good opportunity, but the time to buy it was when it was 1 cent, 5 cents, and 10 cents. Now it's in the 30s and 40s, and a lot of that asymmetry is gone. I still think it's probably an opportunity. But this thing from Kim here, basically, you have to make a move sometime or another. If you stay frozen in place, you're going to lose.
Right, good point. And to apply that to gold and silver, if we believe silver is going to $50 and eventually $100 and maybe a lot more, who knows? You want to be buying now before all that happens. So, well, Mike, here's some viewer feedback for you. This is from Daryl. When I went down to buy some gold, I told the guy, I'm an alchemist. I'm going to turn some plastic Canadian currency into gold. He looked at me kind of strange, but I had a mitt full of Canadian currency and walked out with 2 ounces of gold.
Yeah, that's great. I mean, Ray Dalio says cash is trash. It's interesting that you can turn trash into gold also. So, yeah, I do that. Right now, I have, I recently sold some crypto so that I could have some cash set on the side, and I'm waiting to see if for the signal that gold and silver have bottomed, and I'm going to be turning some crypto profits into gold and silver, depending on the gold-silver ratio. That'll determine how much gold and how much silver I buy. So the last thing is the meme of the day, and it's basically government promises and government programs. And whenever you're talking to a socialist, they will say, well, who's going to do the roads? We all need roads. The government has to do this. Now, would anybody in their right mind buy the level of service that you get from the government on the road system, sitting for hours and hours in traffic, wasting such enormous portions of your lifetimes? And then, here in Puerto Rico, the conditions of the roads, I mean, you should really have a very rugged SUV if you live in Puerto Rico. Because, I mean, there are potholes that would just gobble up my entire Tesla Roadster. So anyway, government programs never live up to their promise.
Yeah, very good. That's a good point. Well, thank you for joining us, everyone. Don't forget to sign up for our free newsletter, and you can get Mike's book for free. We'll put the link below this video if you haven't read it. So thank you, Mike. Thank you, everyone, and we'll see you on the next one.
Thank you, Jeff. See you later.